Die Geldmeisterin. Der Finanzpodcast mit Julia Kistner.
Und mit Luke Bass, Head of Fundamental Equity for EMEA bei Goldman Sachs Asset Management, der noch das Vergnügen hatte, mit Jim O'Neill gearbeitet zu haben, dem Erfinder des BRIC-Investmentansatzes von 2001, in die 4 am schnellsten wachsenden Schwellenstaaten Brasilien, Russland, Indien und China zu investieren. Doch inzwischen hat sich auch bei Goldman Sachs der Investmentansatz in den Emerging Market Bereich geändert. So viel darf ich aber von unserem Gespräch schon spoilen. Nach wie vor sind die Mega-Chancen in den Schwellenstaaten zu suchen und zu finden.
There we go. How are you? My name is Luke Bars. I lead Fundamental Equities Client Portfolio Management business within Goldman Sachs Asset Management. So that is the public equity bottom-up driven investment team. And I run the client portfolio management business for Europe, Middle East, Asia, ex-Japan.
Thank you. And 20 years ago, your famous colleague, Jim O'Neill, published the concept of BRIC, the idea of investing in 4 fastest growing emerging markets players, Brazil, Russia, India, and China. Since then, you and your Goldman Sachs team have a little bit adapted the EM strategy.
Yeah, absolutely. So look, first and foremost, I was very lucky to work closely with Jim O'Neill briefly while he was in Goldman Sachs Asset Management. And obviously he coined the term BRIC in 2001. And I think the important point here to remember is it was very much founded as an economic concept. So it was very much grounded on the view that these 4, what were then emerging market developing economies, would become significant drivers of global growth and would change the global macroeconomic landscape. Mm-hmm. And I think very clearly that thesis has played out over the course of the last 20 years. You are talking about countries that have seen their nominal GDP grow from anywhere between 300 and over 1,000%. Mm-hmm. You've seen GDP per capita grow from anywhere between 250 and again over 1,000%. So significant growth in the relevance of these countries in terms of global economy, mm-hmm. and also a really once in an era transformation in wealth for a lot of the individuals living in those countries. Mm-hmm. And so they have, for the most part, moved towards being middle-income economies, much more developed than they would have been 20 years ago, and clearly far more influential on the grand scheme of global macroeconomic and geopolitical discussions. Mm-hmm. Now, obviously, from an investment standpoint, there has been an evolution in the views that we've taken in terms of how to access that opportunity. And I would say very simplistically, as a lot of investors had limited exposure to the developing world, to emerging markets, this was a very good way for them to step into that emerging market equity opportunity, mm-hmm. with a concentrated approach focused on those 4 most important countries. Mm-hmm. And that has actually, despite the volatility we've seen in the last 10 years, despite arguably the outperformance of US that's driven a lot of recent narrative, been an objectively positive thing for investors over that full period of 20 years. EM and BRIC, specifically the 4 BRIC markets, have outperformed the global market and S&P in that context, mm-hmm. over that period. Mm-hmm. Now, the change, at least in terms of how we've approached that investment opportunity in the last 5 or 10 years, is the recognition that the opportunity set has become increasingly diverse. A much broader set of countries, a much broader set of underlying opportunities. And I think within that, the breadth of the stock level opportunity has also become much more significant. And so it's now less about trying to pick and choose the individual countries to invest in. It's much more about finding the companies that can be successful over that longer period of time. Mm-hmm. And so whilst we still think it's critical to emphasize the BRIC countries within any emerging market equity allocation, we do think there's merit in having a broader, more holistic, diversified EM exposure that also allows you to go into some of those other earlier stage countries and some of those other parts of the emerging market equity landscape.
Fassen wir zusammen. Das von Goldman Sachs Chefanalyst Jim O'Neill vor 20 Jahren verfasste Investmentkonzept BRIC, investieren in die 4 schnellsten wachsenden Emerging Markets, hat sich zwar bewährt und in den letzten 2 Jahrzehnten den S&P 500 und auch den MSCI World bei Weitem outperformt, doch Goldman Sachs fährt jetzt selbst in den letzten Jahren einen ganzheitlicheren, mehr auf Unternehmen als auf Regionen fokussierten Emerging Market Ansatz. Das heißt, Luke, Sie picken sich nicht mehr einzelne Länder raus?
We would still absolutely look at what are the best businesses within those respective countries and consider the long-term opportunity for those, what we would be less inclined to do today is say, now is the time to be investing in China, now is not the time to be investing in China, now's the time to be investing in India, now's not the time to be investing in India. And it's not that those top-down considerations aren't relevant. We're seeing at the moment how much volatility comes from some of those country-specific dynamics, but it's a very, very challenging discipline to get that correct over time. And what has happened as the stock level opportunity set has broadened out, it's allowed you to find a lot more idiosyncratic opportunities that can allow you to generate alpha without having to bear that same binary macro top-down driven risk that you have if you're trying to make allocation decisions.
Zurück zur BRIC-Strategie. Die in Kürzel enthaltenen Länder sind ja sehr unterschiedlich gewachsen seither. Könnten wir uns daher über Brasilien, Russland, Indien, China in den letzten 20 Jahren einzeln unterhalten?
Part of the underlying conviction in the BRIC thesis was the fact there was actually quite a lot of symbiotic relationship that could be created between those four countries. You had, in theory, China and India that were likely to industrialize very rapidly, and you had in Russia and Brazil, two commodity-rich countries that could benefit from that industrialization process. And that was really what you saw through much of the early 2000s, mid-2000s, that industrialization driving a commodity super cycle that buoyed each and all of those countries in different ways. Now, I think in terms of just looking at them individually, what we saw in the case of China was rapid industrialization driven by cost competitiveness on the labor side of things. Effectively, China became the manufacturer of light manufacturing exports to the rest of the global economy. And whilst that was a very, very positive way of catalyzing that wealth creation cycle, because you saw urbanization trends increase, you increased wealth and discretionary incomes for a lot of people who are moving from agricultural economy into the formal economy. What China is now focused on is taking that a step further. And elevating their manufacturing capabilities from light manufacturing exports to much more technologically driven high value add manufacturing, and actually also focusing their efforts on the domestic economy more than that export driven growth. When you look at India, and obviously the discussion we've seen with India has been the question, I would say, is India has lagged behind China in terms of its economic development. Why has that been, and how does that evolve? One of the things that India did not achieve successfully was, in the way that China has, the ability to build a light manufacturing base in the 1990s and early 2000s. The reason that was a headwind for India is then again, you aren't able to catalyze that initial phase of growth where you can increase wealth and incomes for your lower income part of the population and catalyze that domestic demand story. Now, it's fair to argue as we look at it today, it's going to be difficult for India to go down that exact same path because with automation technologies, the propensity to utilize some of those to reduce the dependency on labor means that you can't build the exact same type of manufacturing capability. But what India is focused on is trying to still establish a foundation in terms of manufacturing export in both light manufacturing export and higher value add component manufacture, at the same time as building a domestic driven services economy that can facilitate that same transition. And we've seen a lot of very positive things happen in India in the last 2 decades in terms of wealth creation and economic growth. But I think the backdrop we've seen in the last 6 or 7 years of incremental reform that helps solve each of those agenda items, reducing the bureaucracy on businesses, making it a more attractive place to invest from a corporate standpoint, at the same time as facilitating that domestic demand services-driven economy, is a very positive backdrop for what could be quite an accelerated growth path going forwards.
So you think since India is lagging behind, there's more opportunity right now?
I think there's different ways to think about the opportunity, but I think what we would say is that India is at an inflection point where it could catch up in terms of growth and incomes. If it does follow the path that we think it can follow, partly because China has become a more mature economy, a more consumer-driven economy, India has the opportunity to catch up relative to where it may have been in the last few years. If you take the underlying rationale for that, it's grounded on the view that the reform agenda that's been pushed through in the last 5 or 7 years helps to facilitate that process. It's not going to be perfectly smooth. It's going to have some bumps along the way, but there have been a lot of incrementally positive steps that have been taken that should, in theory, allow for India to follow that trajectory in a far more successful fashion than we've seen in previous iterations.
Luke meint also, dass Indien auf dem Entwicklungspfad, den China schon hinter sich hat, jetzt durchstarten könnte, wenn es die Reformen der letzten 5 Jahre beziehungsweise letzten 5 bis 7 Jahre weiterführt und die Chancen seien gut.
And what about Russia and also Brazil right now?
Yeah, I mean, look, there's obviously nuances related to both countries. We're seeing a lot of discussion around the geopolitical side of things as it relates to Russia. I think that's not really kind of the purpose of our discussion, but it's something that we need to be conscious of. I think in the context of the Russian economy, what is apparent and interesting is you have an economy that has been grounded on commodity exports, that has benefited from, as I said, through the 2000s, a commodity super cycle driven by the industrialization of countries like China, that is having to, over time, adapt to what could be an economic growth model that has less dependency on fossil fuels and other raw materials. Now, that's going to take some time, but I think Russia is trying to think about how to adapt to that lower carbon economy, given the dominance of some of the fossil fuel resources that they've had domestically. And there's interesting aspects of what you're seeing in terms of the emergence of new technologies, what you're seeing in terms of domestic businesses that are starting to challenge legacy players in the Russian economy, but that's a gradual process. And I think likelihood is there's still going to be some challenges when we look at the Russian equity market holistically, because the predominance of your exposure is still in what you'd loosely think of as legacy type businesses, where there's a heavy degree of state influence and control, and that may be a net negative for your minority shareholder investing in some of those companies. For the most part, there's idiosyncratic opportunities that we can find that can still be attractive even against that backdrop, but holistically it's still something that's a little bit challenging.
Somit ist Russland also auf dem Weg, seine Industrie zu dekarbonisieren, doch die Dominanz fossiler Brennstoffe und der starke staatliche Einfluss in den Unternehmungen bremst weiterhin den russischen Kapitalmarkt.
And what about Brazil?
Yeah, so on Brazil, I think that the challenge with Brazil, going back one step, is you had this commodity super cycle that buoyed Brazil to become the darling of not just the emerging world, but frankly of pretty much any narrative you want to see around global economics. And they misused that surplus that they had created. That value that was created was misused or misapplied and leaked out of the system. And so you didn't get that incremental next step in terms of growth, because what you hope to have done, which is to build the infrastructure, build the foundation of a domestic-driven economy, was negated despite the fact you had this huge surplus from the commodity super cycle. And so I think there are still challenges here in Brazil, as we've seen with some of the corruption scandals, and how you kind of make that economy more efficient. But ultimately, the Brazilian market at this point is going to be driven heavily by outcomes in the political elections that we see coming up. And so the big question that we have to answer is, Brazil going to jump back towards the left and move back towards some of the left of center policies that we've seen historically that could be quite challenging for capital markets to digest? Or are we going to continue along the path we're currently on, which maybe has some more tolerable practice in terms of their acknowledgement of private sector enterprise, but has its own challenges in terms of the management of the COVID crisis, amongst other things? Or is there a third path, and we're yet to see candidates emerge that might be able to be that third path, but is there a different route that Brazil can take to try and help get back onto that right path?
Demnach hat Brasilien also seinen Bonus als weltweiter Emerging Market Darling verspielt, den er vor allem im Rohstoff-Superzyklus ab dem 2000er Jahren durch den Rohstoffhunger der stark wachsenden Schwellenstaaten gehabt hat und der nach Ausbruch der Finanzkrise abgeebbt ist. Auf diesen Bonus habe man sich aber zu lange ausgeruht. Jetzt sei der Pfad, den Brasilien politisch nach links oder nach rechts einschlägt, bis zu den Wahlen im Herbst 2022 zu unsicher und das Investmentrisiko zu groß. Lukes Tipp also, noch die Wahlen abwarten.
And if you would be an investor who still has a BRIC product, would you rebalance your investment and how?
Yes, as I think I said at the beginning, I think there's still absolute logic in owning, having exposure to the BRIC markets. Mm-hmm. I'd make a couple of comments. First and foremost, you should be doing that through individual stock level positions. Mm-hmm. So you should be looking at the individual companies you're buying and have conviction that those companies can succeed over the multi-year horizon. And then secondly, I think there is value in saying, whilst that should still be a dominant part of my emerging market exposure, I want to think about the other opportunities that exist outside of just those 4 BRIC countries, whether that's in other parts of South Asia, whether that's in parts of Eastern Europe, in Africa, in South America, Central America. There's a lot of other businesses in a lot of those other emerging market countries that we think are incrementally additive to a portfolio. And so there is value in still maintaining that conviction view in the BRIC countries holistically, but as part of a broader emerging market exposure.
Halten wir fest, wer also noch einen BRIC-Fonds hat, der sollte ihn auch behalten. Nur zusätzliche Schwellenländerpositionen sollte man vielleicht in anderen Staaten tätigen und vor allem eher Unternehmen und Sektoren als pauschale Länder wählen. Auch gibt Luke Bass den Rohstoffexporteuren in den Emerging Markets durch die Dekarbonisierung der Weltwirtschaft weniger Potenzial, vor allem weil sie großteils auch in Staatseigentum sind. Er sieht das Wachstum in Schwellenländern aber vor allem bei den Privatunternehmen. Aber was ist zum Beispiel in China schon privat? Worin kann man da investieren? Vielleicht hat Luke da eine Anlageidee.
What I would say there is no hard and fast rule that we would say, oh, we'd never invest in companies that have state ownership or influence. And actually, in some cases, you can have what we'd loosely think of as the best of both worlds, where a state-owned company can be a de facto monopoly by nature of being the state vehicle. And if managed appropriately and if minority shareholders are rewarded appropriately, actually could be a very compelling investment. But on average, what we see across the emerging market world, and this is true in China as well, is that minority shareholders are not fully recognized to the value of their shareholding in the pass-through of that value creation. Now, in terms of China, I think, look, it's a very different and nuanced discussion. Holistically, 50 to 60% of the equity market is state-owned, and we would find concern with a lot of those heavy asset, legacy-type industrial economy companies because, as I've said, we don't feel like we're getting the full benefit of our ownership. And so those concerns around governance tend to lead us away from owning those businesses, given they're often used to help manage economic transition, manage economic growth in the near to medium term. That said, the Chinese government has been fairly committed to reform in that space. They've rationalized a number of industries where there was just oversupply or via state-owned vehicles. And so you have seen, I'll give you cement as an industry over the last 5 or 6 years, where you've gone from multitudes of local, small regional players, all state-owned or at least regionally state-owned, to consolidation into one or two national state-owned players. And actually that reduction in competition has been, for a number of them, quite positive in terms of incremental pricing and hence profitability. But when we look at China, really the areas we're most excited about at this point are grounded on the view that China is focused on uplifting technological capabilities. It has recognized that it is still in some areas dependent on the Western world for high value add critical technologies, and it needs to build those capabilities domestically to protect itself and to help itself grow going forwards. So whether that's in hardware and software, in the healthcare space, in things like biotech, and in areas like the clean economy, with China's commitments to be carbon neutral by 2060, we expect to see a lot of homegrown innovation and homegrown businesses that are able to really move the needle significantly in terms of what is happening domestically in China. It's not to say that those companies will become globally competitive, though some can and already have become that way. But it's just to say that in a world where China wants to funnel capital towards those domestic innovators and allow them to then develop product that can be sold to their domestic population, that is a very positive opportunity for some of those companies. The more critical issue in emerging markets is that given the vast majority of those are viewed as natural resources that are owned implicitly by the government, you've seen them effectively housed in state-owned entities. Mm-hmm. So 85% of emerging market energy companies, listed energy companies, are state-owned or state-influenced. Mm-hmm. And so what that means is, as a minority shareholder investing in that business, I don't necessarily always get the full pass-through of value that comes from higher oil prices. What you tend to find is oil prices go up. Mm-hmm. The share price performance tends to be quite consistent with that and does very well. Mm-hmm. But over time, people recognize that that increase in top line that comes from higher oil prices isn't translating through to me as a minority, because you might get higher taxation, you might get the desire to increase capex and opex, both ways in which you can drive growth in the domestic market from a political standpoint, as opposed to passing that value through to minorities. Mm-hmm. So we would, again, and this isn't looking at it from a top-down country-specific perspective, but just saying, would we be biased towards investing in private sector businesses in some of those emerging areas of growth, be it technology, be it consumer related, or would we be investing in some of the legacy kind of fossil fuel commodity areas? And very much our bias would be towards the former and away from the latter.
Halten wir fest, in China sind 50-60% der Marktkapitalisierung in Staatshänden und hier besteht die Gefahr, dass man als privater Minderheitsaktionär seine Rechte und Ansprüche nicht entsprechend durchsetzen kann, formuliert es Luke Baas höflich. Allerdings habe man in den letzten 5 Jahren in China doch einige Reformen gesehen und es wurden kleinere lokale Industrieunternehmen vom Staat zu großen, effizienteren Playern in China zusammengeführt, die aber natürlich immer noch im Staatsbesitz sind. Goldman Sachs findet als Investor in China vor allem die entstehenden, staatlich geförderten Technologie-Privatunternehmen sehr interessant, mit denen sich China in den hochtechnologischen Sektoren weniger abhängig von der westlichen Welt machen möchte. Das sind die Bereiche Hard- und Software, Biotech und saubere Energie, denn China will bis 2060 klimaneutral sein. Wie schätzt also Goldman Sachs aktuell das Potenzial für Schwellen- und Entwicklungsstaaten insgesamt ein? Und welche Rolle spielt der feste Dollar hier, der durch Zinserhöhungen ja noch höher oder fester werden könnte? Schließlich sind viele Emerging Market Staaten doch in Dollar verschuldet.
Yeah, so let's answer each of those individually. So at this stage, we're actually incrementally quite bullish on emerging market equities. Mm-hmm. There is obviously a lot happening in markets. There's a lot of concern that we're seeing in the first 3-4 weeks of this year. But we actually think on a valuation basis, and in terms of our base case assumption that we continue to see robust economic growth globally, that should be good for emerging market equities. It trades roughly in line with its long-term average. It trades at a meaningful discount to developed markets, US in particular, which maybe look optically a little bit more expensive relative to their own respective histories. Mm-hmm. Now, in terms of thinking about EM versus US and the allocation decisions we're seeing, we have seen over the last couple of years some net reduction in exposure from US investors in the US market. And there has been some reallocation internationally to help balance their portfolios. And part of that's just driven by the relative outperformance of the US. Mm-hmm. Though I'd say for the most part, there's a very obvious under-ownership of emerging market equities across the vast majority of our clients. Mm-hmm. Even if you take a baseline of global equities being roughly 12 to 13% emerging markets, the vast majority of clients are still heavily under-invested, especially as you go into the US and into the retail channels, where that oftentimes will be a low, if not a mid, if not low single-digit type exposure. So we think there's a lot of opportunity for people to add incremental capital. Now, the question of how the US dollar performs and what that means for returns and potential risks in the asset class is a relevant one. What I would say on that front is, historically, rising US dollar has not definitively been a negative scenario for emerging market equities. Mm-hmm. If the backdrop for growth is very positive, if that is what's driving interest rate cycle in the US, which is what's driving the US dollar cycle, that can still be very good for emerging market equities in the near to medium term. What I would also add to that is, as it relates to the funding side of things, so that the debt side of things and whether there's any considerations or concerns on that front, whilst there are going to be countries across the EM landscape and individual businesses that would be exposed to a higher or stronger dollar environment because they're very reliant on external debt. Actually, you've seen a big shift over the last 10 or 15 years towards much higher local currency debt exposures. And so that has greater flexibility and provides more stability across the EM landscape than if they were, as they were maybe 10, 15 years ago, much more heavily tied to dollarized debt exposure.
Was also für Schwellenstaaten spricht, ist erstens, dass vor allem US-Investoren derzeit sehr stark untergewichtet in Emerging Markets sind und viel Geld da herausgeflossen ist, das wieder zurückfließt. Und zweitens, dass viele Emerging Market Staaten schon in lokaler Währung verschuldet sind und daher vom Dollar nicht mehr so stark abhängen. Welche Investments also Luke Bass von Goldman Sachs in den Emerging Markets favorisiert, sind zusammenfassend folgende.
So I think I may have alluded to them already, but I think on a very long-term view, buying into early-stage innovation in China, in areas like hardware, software, biotech, clean energy, green economy, so in small and mid-cap early-stage businesses, and taking that long-term perspective, they could be beneficiaries of some of those government-driven trends and capital funding decisions, can be a very exciting place to be. And then I think from a country perspective, we have a view that India should be able to catch up quite materially relative to other countries from an economic standpoint, given the reform agendas that have been pushed through, and given the attractiveness of the Indian market holistically, the dominance of private sector enterprise, high profitability due to capital scarcity historically, that can be a very attractive backdrop for investment.
Thank you, Luke. Bye.
Thank you, Julia. Thank you so much.
Bye. Thank you for your time again. Bye.
Thanks. Bye-bye.
Und am Schluss noch der Disclaimer. An dieser Stelle wie immer der wichtige Hinweis, dass die Inhalte dieses Podcasts, der Videos und der Webseite geldmeisterin.com ausschließlich der allgemeinen Information dienen und die ganz persönliche Meinung der Geldmeisterin und von Julia sind. Es handelt sich keinesfalls um Investmentempfehlungen, Rechts- oder Anlageberatungen. Das Gesagte, Geschriebene und Dargestellte kann und soll auch nicht das persönliche Gespräch mit deiner Finanzberaterin ersetzen. Auch sind weder die Geldmeisterin noch Julia Kistner informiert darüber, wie es mit deiner Vermögenssituation ausschaut, deinen Bedürfnissen, familiären Umständen, deinem Finanzwissen, die Risikoneigung oder deinen Anlagehorizont. Anlegen erfolgt daher auf eigene Gefahr. Die Geldmeisterin und Julia Kistner haften nicht für Anlageentscheidungen, die aufgrund ihrer Medienbeiträge getroffen werden. Kurzum, für die Geldmeisterin und Julia Kistner war es immer ein Vergnügen, dich bei deinem Vermögensaufbau zu inspirieren. Auf deinen eigenen, persönlich richtigen Geldesel musst du schon selbst setzen. Viel Erfolg!